Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today. So today we have quite a number of things that we can expect in the markets. First of all, we have the Bank of Canada interest rate decision today, and we expect to see some good movements on the USD card post rate decision there. Now, going over the prices to see how things are moving. Gold, of course, since we last met, I think is still very, very bullish. That's, of course, due to the US election uncertainty. We also have the ongoing geopolitical tensions between Israel and Iran that are, pushing gold higher, as well as also the general uncertainty that we have, of course, in the world at the moment. We have BRICS also meeting currently in Kazan in Russia. And of course, there has also been some speculation around the BRICS possibly making a gold-backed currency that could take on the dollar. So all these different things, of course, some of the things we're going to look into today. Silver, we're also going to look at the silver chart, which, of course, silver has broken out of a 12-year resistance zone, currently trading at about $34 an ounce. And there have been some speculations that a silver squeeze might be underway. That could possibly push silver to higher levels. Looking generally at the commodities are dipping a bit as of this morning. We are seeing some selling coming in for crude oil, some selling coming in for Brent, and we are also days away from the highly anticipated US election shutdown. So in some states in the US, elections have already begun. People are already voting, and we should see the real election commence on the 5th of November. That's when we are going to see some real good movements there. But between 1st and 5th November, we should see possibly, some also high volatility in the markets ahead of the final elections that we shall see starting on the 5th. So currently we are seeing a very strong dollar, and of course for various reasons such as risk aversion, where money is moving to places of safety, like gold is moving to places of safety like money market assets, which of course for money market assets in the US, they are doing relatively well at the moment. We are seeing the 10-year currently trading at about 4.2%. It's actually gained over 13% on this year. And of course, we are seeing also that some bit of movements also for a number of treasuries, but for the US, the treasury is actually looking quite strong, and possibly also seeing some cutback. Traders and investors are cutting back on risky assets for them to move money to safety, places of safety. Most likely the reason why we are seeing a bit of selling coming in for euro dollar. We are also seeing some selling in coming in for the pound dollar. Selling, but of course not really that much of a big sell. I would say a very, very relatively small sell there for the risk assets. Yeah, we're also seeing some selling for Australia dollar. And of course, if you look at USD CAD, USD JPY, all of those are rallying at the moment quite hard. Now, looking at the stocks, we had NVIDIA breaking to over $140 recently, and is now on our way towards 150. We have also seen a number of revisions, price target revisions by a number of big asset managers like Piper Sandler, Goldman Sachs, and Nomura have revised their targets for NVIDIA towards 150, 160, and 170 respectively. So all those are also indicating that we could see NVIDIA moving higher. The Mag 7, or that I would say the FANG stocks, are going to release their stocks. They're going to release their earnings next week. So next week, between 29th, I think, to 31st. Next week, 29th, 31st, we are going to see a lot of earnings coming out. Tesla is releasing earnings after the bell today, so that will be interesting. We can expect to see what's going to happen, especially on the NASDAQ. NASDAQ has been having a bit of a hurdle. It's been at crossroads. It's currently trading at about 20,400, and it's been having a hard time breaking to higher levels. So it's going to be interesting what happens there. Now, let's cross over to the main discussion for today, which is the Bank of Canada interest rate decision. Now, the Bank of Canada is slated to meet today at about 3:30 East Africa time, and they are widely expected to cut their rates for the 4th time this year. following, of course, 3 rate cuts that they have had this year, each of 25 basis points. The markets are currently expecting that the Bank of Canada is going to go big this time round with a 50 basis point rate cut. That could possibly take their current current rates to about 3.75% following 50 basis point rate cut. So this is going to have a lot of impact on USD CAD. If you look at the current interest rate path going to the future, we can expect that there are going to be more rate cuts coming in later as we proceed into the next few weeks and months. Now, looking at the USD CAD on trading view, this is how it has fared following a rate cut at every single period. So the first time we got a rate cut this year from the Bank of Canada, they cut rates by about 25 basis points. And what, of course, happened on that day is that we saw a mere rally where the market spiked up, and soon after spiking up, we saw it actually selling. So that was the first rate cut we got. This was a spike of about 75 pips, and of course it was about 0.5%, and we can expect to see something of a similar nature possibly happening today. Now, going over to the next rate cut the next rate cut we got from the Bank of Canada was on the 24th of July. And what we can observe is that every single time there's been a rate cut, the first time we got the rate cut, we saw a bit of a sharp buy, then of course a bit of a dip, and then 2 days later, USD CAD rallied. Now, going a bit into the future, we are now seeing this rate cut here, which happened on the 24th of July. It was a 25 basis point rate cut. And soon after this rate cut, we saw USD CAD launching such a rally that sent it all the way to 139. Now, the third rate cut that, of course, precedes this one that we are going to have today was also a 25 basis point rate cut. And this reaction by the market was very interesting. Despite us having a rate cut, which of course should have favored the dollar to rally, we actually saw that USD CAD sold, and it actually sold, but then soon after selling into Friday from a rate cut on Wednesday, it jumped on Friday and you saw it trading higher. Now, fast forward to where we are at the moment. Currently, USD CAD is trading at about 138, and the anticipation is that we are going to see spike to the upside following a rate cut. And we are not just getting your usual rate cut this time round. This time round, we are getting a rate cut of about 50 basis points. Now, if you look at USD CAD on the weekly, this is what we can see. We're actually seeing what I can say a range. Okay, it's a range. We're stuck in a tight range though on the weekly. And the anticipation is that we could possibly get a potential breakout of this range following the rate cut by the Bank of Canada. And of course, looking at how the DXY has been trading, as we shall see, it's highly likely that we could possibly see a potential break above there. Okay. Now, it's highly uncertain how far the USD CAD is going to rally before the election. If you look at previous election cycles, just like here, we actually saw USD CAD sold into November. And this sale began as soon as the 26th of October. That was the last time we had a rate cut. So, rather, the last time we had the election. So there are two things in play. First thing is the Bank of Canada rate cut. Second thing is also the US election. Now, the other thing, of course, is that we also have the Fed. The Fed is going to meet. They're going to meet next week, but I think on the 6th. Yeah, they're meeting a day after the election, so they're going to meet on the 6th of November. Now, at the moment, it's too soon for us to speculate what the Fed is going to do regarding cutting their rates. But they're definitely going to cut in November. We are just not certain how big a rate cut. So if we do get a rate cut from the Fed, the Bank of Canada will be, I would say, far ahead of them with rate cuts, and the Canadian dollar could strengthen. Yeah, so for now, let's wait to see whether we can manage to breach this resistance point and possibly trade higher. So let's cross over to the DXY. Now, if you look at the DXY at the moment, the DXY has been breaking barriers. We are currently seeing it trading at about 104.4, and it is now entering into levels that we honestly did not expect. First of all, DXY was able to break structure here. It, of course, had a very, very big hurdle at this level. It took it out very nicely, and we are now seeing DXY trading above this neckline we had on the 19th of June. So where the DXY is at the moment, it's actually likely that it's going to top very soon. The top is likely going to come possibly maybe before the US election, which is going to be on the 5th of, which is starting on the 5th of November. And of course, if we go back to how this same DXY did in the previous election cycle, which was between 2020 to 2021, we actually saw a weaker DXY, okay, which is highly expected to repeat in this cycle. So this is how the DXY did between November to December. We actually saw the DXY selling. It had a drop of roughly almost 5%, okay? So the top that a DXY made, it made a top before the election. It did a grab on, there was a grab on liquidity. That was on the 4th of November. And by 6th November, the DXY had already made about 3 bullish candles. We had a bit of an engulfing here, but around 12th November, and of course into December, the DXY started selling. So if you're a trader and you're out there and you're thinking, how soon could we get a turnaround for the DXY for us to possibly start looking for buys on the pound dollar and euro dollar? I would say the earliest would be sometime at the beginning of November. So I know, as traders, at times we're impatient, or we want something, we want the market to move in our favor quickly, but it's going to take some time. Between now and then, investors are going to go safety. That we're going to have what we call risk aversion. Money is going to move from areas of risk to areas of safety. The dollar is a reserve currency. The treasuries in the US are doing relatively well. Money is going to get packed there. And then after the election begins, or towards the start of the election, if there's no fear or uncertainty, then I believe money will now flood out of the dollar and dollar assets, and we should see the dollar starting to sell. So that the top, I would say, is not so far from now. We might get a likely aim. It might aim maybe to possibly move upwards of 104.7, possibly 105, and then soon after that, we will then definitely see a potential sell from around those areas there. But for now, the DXY is looking very, very strong, and it's likely to continue like this. Okay, now moving over to gold, I think we can look at gold also from here. So for gold, let's look at gold on a 4-hour. Just like we shall see on the MT5, I think we have stayed mostly bullish on gold since, of course, I think since the past 2 weeks have been bullish on gold. Gold has been strong buy, okay? And of course, the recent breakout we saw for gold that took place on the 17th of October, we actually saw gold rallying after breaking this level here, and of course, after breaking this supply zone here where we had that grab on liquidity and that bearish order block, the buyers came in strong, okay? So what is actually helping gold right now is the uncertainty around the election. That's one. The other thing, of course, is that for some of you that may not be aware, Costco is a franchise, supermarket franchise, and they deal in gold bars. So they opened in China, and the demand for gold bars has been through the roof in China. So retail demand is high, and of course, we're actually seeing, this and the uncertainty and the war fears and all of this are really pushing gold higher. Now, where could gold possibly go to? Now, trading gold needs a very, very delicate approach. To first maybe make this clear is if you know that you're trying to sell gold, you're fighting a losing battle, okay? Because gold is supporting mostly buyers right now, okay? Gold is supporting mostly buyers. You need to be very careful with how you manage your risk, especially do not go big, guys. I know typically markets like this usually call you to go in, sell big because you think it's going to reach an end. Gold is just getting started, because if you come and look at previous cycles, bullish cycles, let's look at the cycle which gold had from down here. So the cycle that gold is in right now, okay, it had it before. We previously saw gold breaking a resistance level from 2014 to 2019. It broke this level on the 19th, the 10th of June, and soon after breaking this level, gold had a rally to its next resistance point for the next cycle. The rally was about 50%. Okay, now that breakout that we had for this particular cycle we are in happened in 2024 February, okay, where gold was able to break a 4-year resistance zone around 20,069, and soon after breaking it, gold launched a rally. So if I'm comparing with the previous chart, rather the previous cycle, we are only up about 34% in the current cycle of the rally. The previous one was 50%. So if we go now to where gold is at right now, okay, gold is currently trading at around 2,700. So 2,700, we're up about 32%. So if I do the math, that leaves me with about 18%. Okay, so 18% from here, we are looking at a potential move for gold from current levels. Actually, this is, I need to increase it even a bit more. This is a move of about, so you can see this, 3,300, okay? So, and I'm not saying we are going to go there in one big candle. Some of you are going to misquote me. I'm not saying we are going to go there today. Traders, we get so caught up with things. You think one thing's to happen so fast. Things take time, guys, okay? You need to learn to be very patient with these markets. Okay, so eventually that's where the top is going to be, and then we'll possibly now see gold retracing back to now make its range for the next maybe 3, 4, 5 years. Okay, yeah. So for now, the approach for trading gold, we might want to scalp and be quite delicate with how we are trading. Typically, gold has been having pullbacks every Asia session. If not in Asia, we have been seeing them around 1 p.m. Sorry, not 1 p.m. Asia session pullbacks, we've been seeing pullbacks happening then. So if you want to target a pullback for gold, you can wait for the Asia session around 1 a.m. to 2 a.m. That's if you're awake at that time. Or you can wait for the US Open, the NY session. So between 4 to 5, gold typically has a pullback. So the last pullback we saw, it pulled back from 2,740 to about 2,716. Then we also saw it rallying to around 2,750. That was during the Asia session. Pulled back at 1 a.m. had a pullback to around 2,738. So I think from where it's trading at right now, we might see a pullback somewhere in sight, possibly maybe to around this area here of 2,741 before we see a move back to the upside. Now, the other thing that's also stopping gold from having signs of weakness or signs of bearish momentum is silver. Okay, silver, and of course, we're also going to look at silver the same way we have looked at gold. Silver has broken through a 11-year resistance level. Okay, so just to put it into context, I want you guys to look at silver on a monthly for you to just get a clear picture of what we are dealing with on silver. So that's how silver is looking like. Okay, silver in 2011, okay, it was trading at around $49. Okay, so currently silver was actually able, silver right now has been able to break this level here. So if I just push my my line all the way this way from where we had the break, if you do the math, 24 minus 12, you get around 12, right? So we have now broken a 12-year resistance. We have broken a 12-year resistance on silver. Now, in comparison to gold, gold took out its all-time high, okay, in Feb this year. Silver has not yet taken out its all-time high. Silver has just merely broken out of a 2012 resistance, but it still has 2011. And if you look at this candle that silver has around here, you guys can clearly see that we have some kind of the price action that took silver, that broke silver here, okay, is actually quite bullish, and we could likely see silver possibly trading higher over the next few months, okay. So for us to possibly see a pullback, this is silver's monthly candle meanwhile, okay. If you go and look at it on the weekly, this is how silver is looking like on the weekly. On the weekly, it's also looking bullish on the week. This is the weekly candle. It opened on Monday. We are likely to close this week bullish without a doubt. And you can also see that the momentum that took silver out of this zone here is not your typical momentum. Remember, it stayed here from May up to around October. We were stuck in this range. We've just broken out of it just now. So which means silver, possibly by December, silver should be trading upwards of $41 an ounce. Okay. Yeah. So that's what we're looking at on silver. So let's quickly we're going to go to the MT5 and see how the rest of the assets are doing. Okay. All right, so let me just share my screen in a moment. So now let's have a quick look at BTC USD. So BTC USD, again, looking at it we'll usually look at it on the H4 time frame, I believe. Oh, not H4. I think we usually look at it on a daily. All right, so that's our Bitcoin right now. I think you should be able to see the chart in a moment. So BTC, its structure is still looking very, very bullish. Okay, let me just wait for my chart to get shared. I don't know why it's not sharing. Okay, so this is BTC, guys. So for Bitcoin, we've stayed bullish on it, I would say, for the most part. And the idea with Bitcoin is I've just added this trend line here. Okay, let me first remove this trend line. So I've added a rising trend line, okay, that is marking the points where I'm expecting us to bounce off from, moving higher. Bitcoin has become increasingly bullish. We are now seeing signs of limited selling. It's had about 3 rounds of selling in the year. We saw selling in April, we saw selling in June. We also saw selling around August when we got the invasion of when Iran retaliated on Israel. Then on the 20th in August, we also saw a bit of selling, and now it has created higher levels of structure, bullish levels of structure, and we should possibly then see Bitcoin soon enough breaking this structure here of 70,000. When it does so, then I believe we should see a breakout there. So I've added my rising trend line along my descending points there, which is this one, and this one. And I'm expecting us to, if we do get a retracement, your limit orders for a buy on BTC USD should be somewhere around here, okay? Do not set your limit orders too far down, because I know that if you set them too far down, it's very likely that it may not get to those levels. Okay, yeah. So for BTC, I'm staying very bullish on it, but I'm expecting a potential retracement, especially going into the election. There will be that initial dip that will immediately be bought to the upside. Now, crossing over to the Dow Jones. Dow Jones has had some really pretty nice setups. We've also had very strong earnings for the companies in the Dow Jones. Yesterday, we had strong earnings from 3M. 3M is a manufacturing entity in the US. They make masks, industrial equipment, and also safety equipment. So 3M had very strong earnings. We also had Lockheed Martin, also weapons and gun manufacturers. Strong earnings also from them. JP Morgan also did not disappoint. So that's the reason why we are having Dow Jones staying mostly bullish. However, these very sharp pullbacks that we are seeing on the Dow Jones, I would say, is attributed to a bit of profit taking that's happening on a few stock counters. Now, that profit taking is pressing the Dow down even after us having very strong earnings for some of the companies. In previous election cycles, the Dow Jones has rallied towards the beginning of November, and that rally that begins in the beginning of November takes it into the next year when it's strong bullish. So for now, especially for people who are swing trading, you might want to just stay clear of any trades right now on the Dow and maybe wait for the start of November. However, if you really feel you need to trade, you need to aim for some buys from these levels here. Yesterday, we had a very nice buy. After the earnings got reported, we saw it rallying to around 43,000, and now it's back down to where it started from yesterday. So at the moment, I'm seeing a setup of an asymmetrical triangle on the Dow, and I'm waiting to see whether we're able to possibly break out of this level to possibly trade again at 43,000. But for now, I'm staying relatively bullish on the pound, rather bullish on the Dow, and I'm also waiting to see whether we're able to hold this order block. So there's an order block here on the Dow Jones from earlier here. I expected us to sell. So you see how nice this is looking. It held this order block, this level very nicely with that imbalance candle, bought up from it, and it has done the same thing also here. So if this order block fails us, then I'll just have to move this arrow here, where we could see the Dow Jones having a pre-election sale. So again, like I said, 2020, when I had the last US election, the Dow Jones sold into November. Then when November began, then we saw it recovering. So there's likely going to be a recovery. I would say a very small sell before we then see it possibly maybe buying from here to now move up. Now, the NASDAQ, I'm still bullish on the NASDAQ. I've not changed my stance on the NASDAQ, but the NASDAQ is currently at crossroads. It's having a bit of issues with rallying, and I believe that's because of the uncertainty around the earnings. So next week is when things are going to get very busy for the NASDAQ. Next week we have earnings coming out for the FANG. The Meta is releasing earnings. Apple is releasing earnings. Okay, Amazon is not releasing, but we have Apple, Microsoft. No, yeah, we have Apple. We have Google. We have Google, Apple. Which other one is releasing? Meta is also releasing earnings. So if those earnings are strong, then I think NASDAQ will get its big break next week, and we could possibly see it moving towards 21,000 to make maybe a small peak and then maybe sell towards the election. Structure is looking very bullish on it, and I may want to maybe have my buy limit orders around these levels where we are holding price momentum, so that in case we get a retracement back there, we can have some buys for the NASDAQ headed higher. But it's still looking very bullish right now. Gold, I think I've already covered gold. GBPUSD. GBPUSD is the talk of town right now by traders, swing traders. I know a couple of swing traders who are having a hard time calling the bottom for this thing. And the best way how I would approach GBPUSD is just let it do its thing. Okay, let it sell as much as it wants. but it's not going to sell for too long. There's going to be a turnaround very soon. Soon as the DXY finds a top, okay, which is anytime now, possibly maybe between now and the start of November. Then I believe now there we will then see a recovery coming in for GBP USD and even Euro USD. But for now, when you look at the DXY, DXY is not telling us anything right now. Okay, it's still looking relatively bullish, and that is going to have a hard time. It's going to make it hard for the pound dollar to buy now. We should be having a deeper discount on GBP USD, but the reason why we are not having it is simply because the UK economy is in a very strong position at the moment. The inflation, despite a dip, it's still looking steady. It's going to be very hard for the pound to sell too much. So the buying will likely start above this Fibonacci level here of the 61.8%. If we do get a retracement on this pair, we're not going to go below 1.29. The buying will start from 1.29, and then we move higher. Now, if you look at the pound also on the higher time frame, or if you just zoom out on your H4, you will notice, sorry, my chart has a lot of writings on it, but the structure is very bullish. Okay, structure is very bullish, and when the recovery begins, I believe the pound is going to buy from these levels here, and we should possibly see it trading higher. But for now, it's really just a wait and see. It's really just a wait and see. Now, speaking about the elections, well, first next week we are going to meet, but typically how the pound does before elections is that we've been seeing it having a bit of a sell, and then in November it usually buys. Okay, so you can just come and have a look at that quickly here. So we are going to go to 2020 when we had the last election. So 2020 was, I think, where was it? Should be close by. Okay, yeah. So this is the last election. So the last election we had for the US, the pound to the 2nd of November there was a sell, and then before the election began, the pound launched a rally, and by February the next year, the pound was up about 9%. Okay, so I'm not saying the history will repeat itself, but this is just giving us some bit of an insight of what could likely play out this time round. Okay, yeah. Now, crossing over to Euro USD. Euro USD, following last week's ECB conference, Lagarde, again, if I'm just to reiterate what she mentioned, she indicated that the Eurozone is not in a recession. She also indicated that the ECB will likely stay mostly restrictive. And of course, as you can see, we now have an order block. Okay, let me just wait for my chart to get shared. My chart is not showing. So we have an order block for Euro USD somewhere around there, as you can see. That's the 26th of July. We had structure failing to break from there, and of course, the last time we got a reversal back to the upside, it happened from that zone. So this is where it should start getting interesting, from this area here. Okay, from this area here is where we should start seeing some buyers coming in to come and deep buy or discount buy on this pair back to the upside. Now, fundamentals are looking euro bullish. However, what of course is one of the barriers for the euro to the upside is the strong dollar. The dollar is looking very, very strong right now, and that of course is making it hard for us to see a stronger euro dollar. All right, so I think that's it from me, guys. If you have any questions, maybe before we see the questions, let me just talk about USD JPY. USD-JPY, from when we met last week, we've gotten a number of comments from the Bank of Japan officials, and these comments have actually helped us to trade that USD-JPY very easily. It's trading with fundamentals and less of technicals. We have been seeing an increasingly stronger, an increasingly weaker yen. Okay, right now, and of course, since we last met, we saw that the yen has stayed mostly bullish, and this is following some comments from Bank of Japan officials. So the last comments we got from Bank of Japan officials, they indicated here that Bank of Japan policymaker calls for very moderate pace of rate hikes. Then we also see here that the BOJ is said to see little need to rush a rate hike in October. Okay, so this comment is weak for the yen. If we're looking at terms of it, if we're looking at in terms of what does the comment mean? Okay, this comment is actually weak for the yen, and soon after we got these comments, we've been seeing a strong yen, and the yen has broken out of a key level of structure. This is this resistance of 150, and it's now trading very strongly parabolic out of that area there. And now the next thing, of course, is now to just wait for the Bank of Japan conference, which is on the, which of course is on the, it's going to be on the 31st of October. Okay, so 31st of October is when now we see what next. They have made comments that they are going to go a bit slow in October. They're not going to hike quickly. Will they change their words? Because if they do, I think then the USD-JPY will start crumbling. Okay, it will start selling, and we'll then see a much stronger sell into January next year. So, and of course, looking at where it's seated, there's a very, very deep pullback that this thing could have, all the way to these areas. There are a dip of almost 8.4%. Okay, it's a very, very big dip that's possible if the dollar were to weaken. Okay, yeah. So, guys, I think that's it from me. If you have any questions, you can send in your questions now. We can go over them. What is the symbol for silver? Silver is XAG USD. That's the symbol. XAG USD. XAG. I can just write it for you here. XAG. Okay. I actually, fortunately, I don't know if I can. Oh, I think I can. XAG USD, something like that. Okay. Can maybe just make my letters bigger for you to be able to. XAG. Okay. XAG USD.
Previous cases I had.
That's right. That's the symbol for silver. Can you analyze CAD CHF? CAD CHF. It's been a while. Let me go and put it up on the MT5 and see if I can get it.
So that's why you never had anything to on your side. Then Then the other thing I wanted to ask about is about there's some people who are able to make deposits using mobile money on equity shares, but with low.
So CAD CHF, that's a cross asset, that's a cross pair. So let me just look for it. So ahead of today's Bank of Canada interest rate decision, this is going to be a very interesting pair to trade. We're already seeing some strength there coming in for the CHF, definitely, which of course is the case. That's ideally what should be happening, since the market is already anticipating a weaker, the market's already anticipating a potential rate cuts by the Bank of Canada. Now, I'll be honest with you, this pair is a very, very choppy pair. So you need to trade it with a very, very delicate approach. Otherwise, you can get squeezed out of your trades so easily with this pair. Yeah, but the bias for it is actually a sell in favor of the CHF. And of course, we're already seeing that with I mean, you can see the kind of structure we're having. and it's likely going into today's interest rate decision. We could definitely expect some weakening for the pair towards this area down here, in favor of after the Bank of Canada does cut rates today, CHF would definitely sell. Now, whoever have a lot of sweeps or grabs on liquidity along certain areas here, so you might want to watch your stop loss. Your stop loss should not be within these areas here. I'm already seeing an imbalance here, so this is these are areas where your stop loss should not, your take profit should not be rather. So if you're going to trade, possibly maybe look for potential sales here with the stop losses slightly above that descending line there, just in case maybe the market were to reverse and trade higher, your stop loss can be triggered. But the bias for this pair is actually a sell. Yeah, that's my opinion on this pair. I hope that helps, Victor. I know, but assuming that Bank of Canada goes for a 25 basis point rate cut, how would USD CAD respond to such? Now, if the Bank of Canada does hike or rather cut by 25 basis points, the USD CAD will respond with a buy. Okay, it will have a knee-jerk buy. Okay, and we can actually see how that should look like if you look at the USD CAD on trading view. The knee-jerk buy would be since the market. Okay, now that's an interesting question, All Sports TV, because on one hand, after discussing with traders, I've also noticed that we could have what I would say is termed as what's the word? Yes, I would term it as a buy the rumor, sell the news. Now, USD CAD has been rallying quite strongly, guys. It's been rallying from the 2nd of October. And along this rally, I've done my research and I've actually realized that the markets have already been pricing in a rate cut. And we're not looking at even a rate cut of 25 basis points. You're looking at a jumbo rate cut, supersized rate cut of 50 basis points. So this rally definitely looks interesting. If you look at it, it typically shows you that the big players or the institutions and the different participants in the forex in the forex space have been anticipating that the Bank of Canada is going to cut rates. So if this tells us anything, it's like that the people who bought here already know that the rate cut is going to come. Okay, so if they do cut, will we get a very big reaction? Highly unlikely, but the reaction will be there. And if it is there, it's likely that we get a bit of a buy. Just a moderate buy. This may be too much, maybe something like this before we reverse back down. That's what I'm expecting. Yeah, but if you're to trade the news, you should be looking for a buy on USD CAD or a sell on the Canadian dollar. Yeah. NY open, of course, it will be choppy. Yeah.
Yesterday I was trying to get in touch with the IBs.
What is the effect of continued rate cuts on the US real estate market?
Make arrangements for them.
What is the effect of continued rate cuts on the US real estate market? I don't know if I can advise on that, honestly. That has caught me off guard. But maybe what I can just say is obviously, of course, for those who have to refinance, definitely they will refinance at lower rates. So of course it will be cheaper for them. But it also depends on the kinds of mortgages that they are in. Okay, if people that were able to maybe grab or those that got into fixed mortgage rates at when the interest rates are high, they are going to wish that they locked in lower rates, since of course we're expecting the rates to actually get weaker. But typically during times of rate cut cycles like the one that we are going to get into, the mortgage rates definitely are weak. They decline or they get weaker. So of course now what that means is that it will be I would say relatively easier on the American home buyer or the home buyer, but also the American the American who is actually has gotten a mortgage arrangement, and they are paying a certain amount of interest every month. Yeah. Okay, Felix, you're saying, hey, good morning. And of course, that question is really unrelated to trading, but I would say that's really what it is. Yeah. During times of low interest rates, refinancing becomes easier, but also for the American home buyer and also for those that want to get into mortgage arrangements, it's relatively cheaper for them. Yeah, credit is cheaper. GPP-CHF. GPP-CHF, let me just go pull it up. I actually do not have GPP-CHF. I don't have GPP-CHF here. So let me just pull it up and see. Let me see. Cross pairs, a number of you are trading cross pairs. Let me see. Yeah, so for GPP-CHF, if you're trading it, I believe you're trading on FX Pesa's Premier account, which typically, of course, GPP-CHF, let me see. Yeah, so for GPP-CHF, again, also a choppy pair to trade. And of course, as you can see, this one has a lot of choppy price action. Let me just look at it on the... Can you kindly analyze GPP-CHF? Okay, so let me look at it on the daily. Just see how it's moving here. All right, so for GPP-CHF on the daily, we're also seeing some sort of an asymmetrical triangle forming here. But if I'm to look at it in terms of fundamentals, I would say this one is not really much. Pounds, of course, is the stronger pair, is a stronger currency of the two. And if you're looking at the policy path, we are seeing that Bank of England is moving much more slower compared to the Swiss National Bank. So that should favor a stronger pound. In terms of setups, I'm seeing an asymmetrical triangle right now. And on the 4-hour, we are seeing a bit of a steady uptrend with higher highs, indicating that we should see a potential push to the upside. Yeah. But these pairs are choppy. So if you're going to trade them, you might want to swing trade them. So you might not look for buys towards these areas where you have those grabs around here, for instance. We are seeing a bit of buying taking place within that zone. So possibly maybe you could look for buys. Set your limit orders around here so that in case the price reverts back there, then you can possibly see a push to the upside. Yeah. At the moment, the pound is I would say, relatively weak. But if we do get some bit of recovery there for it, then we should see this pair possibly moving higher. Yeah. If you look at it on a weekly is also looking, I would say, mostly bullish. We do have, though, some sort of bullish engulfing there that could possibly maybe help us to see a potential move to the upside. Yeah. So I think that's it on GPP-CHF. How are indices related to the DXY in terms of correlation? Now, guys, I've gotten that question and a lot, and I just want to inform you guys that there is actually no correlation, okay, between a DXY and the NASDAQ. Why do I say this? NASDAQ is moved by fundamentals, okay, mostly. Like 80% of what you see on NASDAQ is fundamentals. As traders, we typically will also bring in aspects of technical analysis. Yes, that's true. But stocks are moved by fundamentals. Earnings, that's one. How is the company doing? Okay. We're looking at in terms of you have earnings, that's one. And of course, we also look at the future. Okay. For instance, like the growth stocks, look at how they are going to do in the future. And things also like demand for the stocks. If tech typically right now is doing really well, especially since we are in this kind of AI boom. Okay, so NASDAQ, you focus more on the fundamentals. Look at the earnings reports. You look at the earnings, the earnings reports typically, that is 4 times a year. Then you also look at, what else do you look at? You look at also the metrics, the inflation. NASDAQ does well when inflation is low, okay? During times of high inflation, the tech stock typically tend to do badly because to keep up with inflation, the rising inflation, people jump out of the tech stocks, okay, to help to keep up with their cost of living. So periods like now where inflation is low, NASDAQ has actually been on a very, very strong upside. Yeah, it would be very misleading for you to have the DXY along with NASDAQ because now take it for example, like now DXY is buying, NASDAQ is also buying. And the idea for most traders, the ones that I've had, is that usually they will tell you that when NASDAQ is buying, DXY is selling, which is very misleading. So you have to make sure you focus on the fundamentals. Yeah, awesome. That's it, guys, from me. I wish you guys all the best. And maybe just to speak about the Tanzanian Trading Titans event, which is happening on the 2nd of November at this is going to be the Julius Nyerere International Convention Center. So the link is in the description below. Check it out and sign up for that event. Yeah, cheers, guys, and I wish you all happy trading.